Hey, good morning, everyone. Brian Hoops here with Midwest Market Solutions. This is Market Insider TV and our opening commentary. It's Thursday. It's April the 10th. Good morning, everyone. We thank you for joining us here. We're going to take a look at some news and export sales, CPI numbers that all affect the markets this morning, talk about what's happening, why. I will be doing RFD TV this morning at 8:15 Central Time, as well as Friday morning at 8:15, and then again next Monday. So next 3 days of trade, I'll be doing the commentary, and we hope to have you tune in for that appearance. If not, we try and send out the link after we receive them from RFD later in the afternoon. Let's look at the overnight markets. First of all, the dollar crashing in here, and we expected the dollar would continue to be weaker. Now, because of the tariffs, even though we put a 90-day pause on them yesterday, the tariffs are still there, and 10% right now. We'll talk more about that, but this is that tariff and concerns with China is going to weaken our dollar in the world economy, which is what President Trump wants. A little bit weaker dollar that gives us better opportunities for export markets, for commodities. For a lot of our products will appear cheaper. So the dollar is going to benefit. And look at all the grains, all the green on the screen in here. 1.5 cent gains in corn, beans up about 3, wheat 1.5 to 2, or 1.5 to 3.25 better. So all these markets seeing some strength, partially because of that lower U.S. dollar. Look at gold, $65 better. Silver up 48 cents. These markets, yes, it's a flight to safety, but inflation is going down. But yet gold is continuing to move higher, partially because of that weaker dollar. Crude oil, unfortunately, is dropping. I guess it's fortunate if you want cheaper gas prices, which is what the White House wants. But it had a good rally yesterday, and it's given back a lot of that today. Stock market down overnight, despite some wonderful CPI numbers. Can't wait to hear President Trump talk about these, what adjectives he'll use. But great numbers, market's down anyway. Let's get into some of the news here and what we have on tap. Again, visit our website, which is MidwestMarketSolutions.com. You can sign up for our daily newsletters, our video series, Twitter feeds, text service, all that you can do at our website, Facebook page, you name it. We're trying to provide you information on that platform. All right, if you want to reach out to any of our offices, there's a list for offices. You can find them at our website as well. Spring planting weather for the Midwest, it looks wide open with only limited shower activity. I think we're going to get going. Once the temperature warms up, it'll be pretty active pace, according to the forecast right now. Bad news is there's not much rain in the winter wheat plains areas, and they badly need some moisture. So look for Kansas City to continue to gain against Chicago, Minneapolis, and some of the other grain markets. So yesterday was a pretty historic day. In fact, these times that we're living in are very historic. President Trump announced on Wednesday, U.S. is now raising the tariff on China to 125% effective immediately. However, for the countries that have reached out to negotiate with U.S., a 90-day pause and a lowered reciprocal tariff during this period of 10% is going into effect immediately. Markets love this news, took off and rallied. We saw a huge rally, the biggest intraday rally in the S&Ps in history. Yesterday, we saw a big rally in the stock market, the cattle markets, the grain markets all found this news very positive, lowering the tariffs. Even though we raised it on China, we lowered the tariffs on all the other countries, gave a pause of 90 days to negotiate. And trade looks at this as we're opening doors to have better export business with other countries, which is exactly the goal of these tariffs. The goal is not to have these tariffs in place for a long period of time and to raise money from the tariffs. That's a side effect. The goal is to get better trade agreements. Weekly export sales this morning, nothing to write home about. Wheat for this marketing season, 3.9 million bushels. And 4 for next year. Corn sales at 30.9, soybeans only 6.3, and unknown destination canceled 9.4 million bushels of soybean sales. That's more than we had sold, ended up selling last week. So again, nothing to write home about these export numbers whatsoever. And they, hopefully they'll get a little bit better. But as we go into South American harvest, get deeper into it, our exports usually slow down. April supply and demand report, that comes out today at 11 o'clock Central Time. Corn exports were left unchanged last month. Trade is expecting a 25 million bushel increase in exports, as well as a decrease of similar amount in ending stocks today. Corn stocks estimated to be 1.51 billion bushels versus 1.54 last March. Soybean stocks at 379 versus 380 in March, and wheat stocks at 825 versus 819 a month ago. All right, beef sales were 11.9 million tons, shipments at 15.1, pork 23.9, and shipments were 30.1. Not great numbers as far as these beef and pork sales go. In fact, the pork number down significantly from last week, because I think last week they were kind of gearing up ahead of the tariffs. We haven't seen any cash cattle trade yet, and the bids were 200 last week, or excuse me, I should say yesterday, 200 less yesterday. No cattle were bought. Asking prices were 208. I imagine we're going to ask that same 208 after the rally in the futures yesterday. And cattle futures may give back some of their gains with the stock market being down this morning. That is how I would view things. Hope you have a great day of trade. And as always, reach out to us. We'd be glad to talk markets with you. This has been Brian Hoops.